Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Welcome back to the Ask Ralph Show. We're going to continue our wonderful and informative series about payroll. You know, we've talked about the basics of payroll. We've talked about payroll issues. We've talked about outsourcing your payroll. Now we're going to talk about things that small business owners should know about payroll tax problems. So let's just cut to the chase and say, you know, this is what we're going to talk about problems. You know, past due payroll taxes can cause you to lose your business. That's the truth. And in some cases, your freedom. The IRS is focusing increased tax compliance efforts on small businesses, so it's important to know the common payroll tax audit triggers and learn how to avoid severe IRS penalties, huge tax debt, and federal criminal investigation. You know, I joke with clients sometimes, we talk about payroll. Yeah, this is where the guys with the gold badges from the IRS come out to visit you. You know, this is an area where you could potentially get yourself into criminal prosecution. You know, it's not like, hey, you know, the IRS is going to come after you for civil penalties for not paying. They'll do that, but there may be criminal elements to this as well. So, number one, small businesses are the most likely target of increased tax compliance enforcement. Small business owners have been identified by the IRS as the largest source of uncollected taxes. And because they are known to be big tax evaders, the IRS tends to focus their enforcement efforts on small business, especially during economic downturns. So if you're a small business person, you have, just because of what I just said, the IRS is already giving you a higher level of scrutiny, because what they have figured out is that these are the people who are having issues in the payroll tax system, either not paying their taxes, not filing the tax forms, not handling their employees correctly. So you're already, if you're a small business owner, you've got the target on you already. Number two, you can lose your business due to extremely aggressive IRS collection tactics for past due payroll taxes. Trust me, I have dealt with this with the IRS and with clients before. This is no joke. The IRS will come at you. When it comes to payroll tax debt, the IRS collection revenue officer has unyielding power and authority. That's the truth. They have the power to padlock your front doors, putting you out of business, even without obtaining a court order. They can seize your machinery and equipment. They can contact your customers. And if your customers owe you any money, the IRS will intercept these funds through their powerful levying authority. You know, unlike a lot of things, the IRS can actually levy your money. You must take immediate action to deal with payroll taxes, or you will find yourself out of business. I can't say that enough. You know, getting back to our last session, we talked about outsourcing it. You know, this is why I say this, because this is an area where I see businesses fail. This is an area where I see businesses go under, where I see, you know, great amount of hardship because of payroll problems. Now, the next thing is payroll tax penalties can add up quickly and generate huge tax debt. The penalties assessed on delinquent payroll tax deposits or filing can be dramatically increase your total tax bill. Whether you operate your small business owner as a sole proprietorship corporation or LLCs, the taxes you owe can cause you to lose your business. There are three major penalties you can get hit with, and let's talk about those. There's the failure to file. Just like a personal tax return, you have failure to file your federal employment tax returns. Failure to deposit, and the failure to pay, which can add up to 33% plus interest if you don't pay in just 16 days after you filed your quarterly 941 past the due date. So we talked about this a little bit in our first introductory section. When you file that 941, which is your quarterly federal tax report, if you don't pay your taxes monthly, or if they're due more frequently, they will hit you with major penalties, up to 33%, plus the cost of interest from when that should have been paid. So these things will get big very quickly. Number 4, not filing or paying your payroll tax can be considered a federal crime. Yes, this is a criminal offense. The IRS can refer your case to the Criminal Investigation Division. It's the guys I call with the little gold badges. And ultimately to the Department of Justice if they can prove that you intentionally didn't file and or pay. Now, one of the things I want to note here, and I've read a couple studies about this, Intentionally means a very low threshold. So if you decide, here's a great example of this. If you decided that rather than paying your payroll taxes, you're going to pay, the payment for your machinery. Let's say you have a loan for machinery or you have a bank loan. That could be considered intentional if you decided to pay something instead of paying your payroll taxes. Now, which leads me to the next thing was borrowing from your payroll taxes is against the law. Many small and mid-sized businesses use the money they collect from payroll taxes to pay their operating expenses. The money collected from employees to pay their share of federal withholding tax, FICA, Social Security, and Medicare does not belong to the business and must be accounted for and paid to the government. In general terms, one must make a federal tax deposit by filing service, person or in person at a bank 3 days after the pay date of the payroll checks. What we're talking about there is what I talked about is the bi-weekly payroll. So if you've got a payroll that's paid on Friday, those tax deposits need to be made by the following Wednesday. You cannot use that money for other things. And this is the thing I see a lot of employers get themselves in trouble with because the economy turns. They're waiting for a payment from a customer and they've got this money or they've got these things that they need to pay. And they say, well, you know what? I'll pay the payroll taxes next week because right now I got to pay for materials. Now, the IRS can come after business owners individually for payroll taxes owed. So even if you say, well, Ralph, but I'm a small business corporation, I'm a C Corp, I'm an S Corp, I'm an LLC, it does not matter. The IRS can assess what is called the Trust Fund Recovery Penalty. It's called a TFRP. And they can assess this against owners and shareholders. The IRS is the only creditor on the planet that can pierce the corporate veil and go after individuals, which can be a very scary situation. I've dealt with these before. So let's say your business goes belly up. You lose everything in a corporation. If the IRS can come in and figure out that you were responsible for paying these payroll taxes, they can still come after you personally. You cannot hide behind a corporate bankruptcy. They will assess this trust fund penalty against you and they will get your assets. They will seize your personal assets to pay these payroll taxes. Now, what happens if you do get audited? If you owe payroll taxes, you need to get an expert professional to help you before it's too late. Representing yourself before the IRS, would be like going to court without a lawyer. And none of us want to do that. And you don't want to take any chances when dealing with the IRS. So if you find yourself in one of these payroll issues, whether you've caused it yourself, whether something happened with the economy, whether you had an employee that was supposed to handle this, this is not something you want to take lightly. When you see a notice from the IRS that's relevant to payroll taxes, you need to contact a professional, somebody like myself, a CPA, an accountant, or somebody that can help you, maybe an attorney even, depending upon the severity of it. This is not something that you want to play around with. I think I've been very clear about this. I don't mean to scare you, but this is an area where we really see big problems. So in our next session, we're going to talk about the consequences of willful failure to pay payroll taxes. So make sure you tune in for that.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.